You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 31st day of July, 2024, Fed Day. We are in the middle of the busiest news week of the summer. And by news, of course, I mean econ reports. Anyway, thanks for joining us. Whoever you are, wherever you are, we're always glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is private. That's our live training room. That's for members only and those who are taking their 1-week free trial. When Michael joins us later in the broadcast, he'll walk you through the steps of how you take the free trial. There's no credit card required, and you gain not only access to the live training room, but you have unfettered access to every resource that our passport holders have access to, and you have it for 5 consecutive trading days. It doesn't matter what day of the week or weekend you sign up for the trial. You'll get 5 consecutive trading days, even if it stretches over a weekend or a holiday. So never worry about what day of the week or weekend or hour of the day you sign up for the trial. When you sign up for the trial, the first thing that's going to happen is we'll get your desktop set up, get your indicators indicating, and then your trial will officially begin the following day. And again, if it stretches over a weekend, the weekend doesn't count against your 5 days. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways you can join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you will have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and you can't join live, but you do want to get caught up later. You can do both of those things via our YouTube channel, which is very easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you want to use a fancy word. We also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today or this week, but thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more, and literally see how we've evolved over the years. Obviously, you're not going to watch them all. And the more recent ones, of course, are going to be more relevant to what's happening in the markets and the world right now. But there's 8 years worth of daily episodes out there. So make yourself at home. youtube.com/CFRN. And while you're there, hit the subscribe button. Maybe give us a thumbs up. Click the little bell. This way, you're always notified anytime we go live. Our daily schedule each day for this broadcast, we start with our daily devotional, word of prayer, get into some market news, and then we begin a recap of the Logic 247 alerts, the concierge trade alerts. Then about 12:50, Michael will join us, give us a recap of everything that happened this morning in the live training room. Then we'll go live on the TradingView platform and do some live trading for about 30 minutes. And I'll come back, finish my recap if I haven't finished it yet, and then wrap things up with our good word for the day. So, let's get into the devotional. The topic of this week's devotional is the whole armor of God. Today's scripture, Ephesians 6, verses 11 through 13. Put on the whole armor of God, that you may be able to stand against the wiles of the enemy. For we do not wrestle against flesh and blood, but against principalities, against powers, against the rulers of darkness in this age, against spiritual hosts of wickedness in the heavenly places. Therefore, take up the whole armor of God, that you may be able to withstand in the evil day, and having done all, to stand. Ephesians 6, 11 through 13. We've talked about the belt. We've talked about the breastplate. We're going to talk about the footwear. No, not Air Jordans. The shoes of the gospel of peace. In the spiritual battleground, the armor of God provides defense and ensures believers are ready for the journey ahead. Returning to the concept of spiritual armor, we delve into the shoes of the gospel of peace, a crucial component that grounds believers in tranquility amid life's storms. Ephesians 6:15 instructs believers to stand firm with their feet fitted with the readiness of the gospel of peace. This scriptural foundation establishes the unique role of footwear in the armor of God. Now, here's the symbolism of shoes. In the historical context of ancient warfare, shoes were essential for stability and readiness. The Roman soldiers, whose attire heavily influenced the description of the armor of God, wore sturdy sandals called caligae that provided grip and mobility in various terrains. Similarly, the shoes of the gospel of peace symbolize the stability and readiness that the gospel brings to the believer. The gospel, often called the good news, is the source of profound peace. This peace, symbolized by the shoes, is not a mere absence of conflict, but a state of tranquility and assurance. It connects believers to a stable foundation, preparing them for life's challenges with unwavering readiness. In navigating life's challenges, the shoes of the gospel of peace play a vital role. The peace derived from the gospel becomes an anchor during trials, a foundation that keeps believers steady amid uncertainties. It is a peace that surpasses understanding, providing assurance even in the midst of turmoil. A practical application of the shoes of peace is sharing the gospel itself. As believers share the good news, they contribute to promoting peace, peace with God, and peace among individuals. The gospel becomes a unifying force, fostering harmony and reconciliation. Throughout the biblical narrative, instances of unreadiness are stark reminders of the consequences of neglecting the gospel of peace. As the Israelites faced the Red Sea, their lack of trust in God's plan led to fear and panic. Their unreadiness to embrace the peace God offered resulted in anxiety rather than assurance. In the New Testament, we have an example in Mark 4:35 through 41. This was the storm. The disciples exhibited unreadiness and fear during a storm on the Sea of Galilee. Jesus' rebuke highlighted the need for trust and peace, even in the face of life's tempests. In conclusion, the shoes of the gospel of peace provide believers with more than just footwear. They offer a symbolic stance of stability and readiness, grounded in the profound peace that the gospel brings. As we don these spiritual shoes daily, we not only find our own footing secured, but also become bearers of peace, sharing the transformative message that brings stability to others in their journeys. Join me in a word of prayer. Heavenly Father, come before you today, seeking your strength and protection. As we put on the full armor of God, help us to stand firm against the schemes of the enemy. Grant us the wisdom to recognize and resist the forces of darkness, and the courage to stand our ground in the face of adversity. Clothe us in your truth, righteousness, and salvation, so that we may be prepared for every challenge. May your Spirit empower us to remain steadfast, knowing that you are with us in every battle. It's in Jesus' name we believe and pray. And everybody said, Amen. Well, happy Fed Day. Happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, the indices as they're called. Currently the Dow up 234 points, the NASDAQ up 442 points. That's over 2.5%. The S&P 500 is up 89 points, which is over 1.5%. And the Russell 2000 is up 18, almost 1%. In the commodity basket, crude oil doing a turnaround, up $2.65, trading 77.38 last. We did have inventories this morning. That's a gain of 3.5%. Gold is up $15.70, trading 24.67.90 last. Silver up 40 cents, trading 28.93 last. That's a gain of 1.5% for silver. In the Asian markets at the close, the Nikkei gained 575 points, and you'll understand why when we get into the news articles that I have for you. Nikkei up 575 points, 1.5%. The Shanghai up 59. And for the Shanghai, that's a little over 2%. The Hang Seng is up 341. That's a little over 2%. And in the European markets at the close, FTSE up 93, over 1%. The DAX up 97. The CAC up 56. And so it was a green day in Asia. It was a green day for the UK. And it's definitely a green radio Wednesday Fed day here in the US of A. So let's take a look at some news. U.S. private payrolls increased far less than expected in July, or June. There's a misprint. But that likely is not a true reflection. No, that is correct, in July. We're heading into August. But that likely is not a true reflection of a labor market that continues to moderate gradually. Now, this article is from Reuters. It's not my personal opinion. Private payrolls rose by 122,000 jobs this month after advancing by an upwardly revised 155,000 in June, according to the ADP National Employment Report. Economists polled by Reuters had forecast private employment would increase by 150,000 positions after a previously reported gain of 150,000. So that was, in fact, a swing and a miss. MasterCard beat their second quarter profit expectations this morning before the bell and said spending was holding up, reassuring investors worried about customers' financial health after a swath of companies warned of pressure on low-income households. Now, let's not kid ourselves, okay? MasterCard's not a debit card. I mean, it can be. As our nation just hit a milestone this week of $35 trillion of debt, which I shared with you, I think, yesterday. The citizens of this fine country have more debt than in all of history. Now, the robust performance of MasterCard was helped by robust growth in key international markets like Europe and Latin America, coupled with a healthy U.S. consumer. Of course, that's MasterCard spin. MasterCard's results, while not perfect, should give reassurance that the spending environment remains solid. How many offers have you gotten lately to increase the limit on your card? And how many new card offers have you gotten? Pinterest. I never understood Pinterest. Pinterest shares tumbled nearly 10% today after a muted third quarter outlook dashed expectations for a stabilization in its revenues, as heightened competition in the digital advertising space hurt the company, despite broad-based recovery in the entire sector. The photo-sharing platform on Tuesday projected current quarter revenue below analyst estimates as it struggles to keep up with bigger rivals, including Meta's Instagram, Facebook, and Alphabet. U.S. labor costs increased moderately in the second quarter as private sector wages grew at the slowest pace in 3.5 years. Now, what else has been going on for 3.5 years? Has there been a lot of cheap labor streaming across our southern border? I'll let you do the math. But it is more evidence that inflation is firmly on a downward trend and could help facilitate an interest rate cut in September. The report from the Labor Department on Wednesday followed data last week showing inflation subsided considerably last quarter, with sub 3% readings in all the measures. Labor costs are likely to cool further as the stream continues across the border. Now, everyone's pinning their hopes on a rate cut in September. This is not a forecast, but don't be surprised if Jerome Powell does a surprise rate cut today. While no one else is calling for that I know of, I've really been thinking about that this morning. And the environment is ripe, especially with all that's going on Capitol Hill, the upcoming election. Now, while the odds makers say there won't be a rate cut today, be sure to listen for some extremely dovish talk. Then we'll talk about it tomorrow. Now, we talked for the last couple of weeks about the trouble in Japan's stock market, the Nikkei. But Japan's yen surged to the strongest since March versus the dollar after the Bank of Japan raised interest rates and announced plans to cut bond purchases, reigniting an aggressive rally. The currency climbed more than 1% against all of its group of 10 peers, punching through the key 150 per dollar level and adding to a rapid advance that began earlier this month in anticipation of a hawkish decision by the central bank. Japanese government bonds tumbled in the wake of the announcement, with the yield on 2-year notes climbing to the highest in 15 years. And if that's not enough to make you sick, let's talk Humana. Humana shares tumbled after the company warned of higher than expected inpatient hospital admissions that point toward elevated costs for the insurer. Shares fell as much as 10% as the U.S. market at the U.S. market open after the company flagged some worrying trends for investors. Humana saw higher than anticipated inpatient admissions in the later half of the second quarter, according to prepared remarks posted on its website. The stock had lost about 12% this year through yesterday's close. Now, do I believe that everyone should have access to quality health care? As a human being, obviously, that answer is yes. But at what cost? People who are in our country illegally have health care like a senator. If you get sick and you don't have insurance, you're not only going to go in debt, you may lose your home. Something to think about. Not a pretty thought, but it's the truth. We are being overrun. Logic 247. Currently, we're in week 313. And over the last 313 weeks, we've issued over 17,400 individual handcrafted alerts. Now, it's not just E-minis, but also crude and gold and silver and euro and bonds. Since the markets opened Sunday night at 6 p.m. Eastern, as of 12 noon today, we've issued a total of 60 alerts. One never triggered. Still waiting on the outcome of 10. That gives us 49 actionable alerts, of which 8 or 16% would have been stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, over the last 313 weeks and 17,400 plus alerts, we've averaged on a weekly basis 20% or less of the alerts being stopped out, again based on market structure and that very simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to teach you how to read a chart, how to spot windows of opportunity. Our original alert service, the concierge trade alerts, they're a little bit different. They actually help you see if you have, in fact, learned to read the chart. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. But the CTAs are published as a static report shortly after the Globex Open each evening. So last night, 10 minutes after the open, all of our members had every one of these targets, members and trial members. When the report comes out, the first thing you do is go to the 30-minute chart of whatever markets you actually trade and make a note on that 30-minute chart where price is at the time the report is published. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is the green line you'll see on all my charts. It stands for bull, bear, cross. Whenever price crosses above the green line, we anticipate higher prices. When price crosses below the green line, we anticipate lower prices. It's pretty simple. Now, all alerts, both logic and the CTAs, are based on the 30-minute chart. But you can apply the BBC to any chart: daily, weekly, monthly, 4-hour, 1 hour, 30-minute, 5-minute, tick chart, range chart. It doesn't matter. Price flows the same not only across all markets, but across all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now, with the logic alerts, and we walked through them all, I believe it was yesterday. The logic alerts give you an entry price, an initial target, additional targets, and then a final trade to target. And as I said, the purpose of those logic alerts is not for you to just trade them so you don't have to worry about learning how to trade. I know some people make that mistake, but I'm asking you to use them as they're intended. See, our goal is for you to become self-sufficient. As long as you're dependent upon man or machine to tell you when to get in and when to get out, you're never going to trade for a living. You got to learn to read the chart like a newspaper or a good mystery novel. You got to be able to look at a chart and instinctively know what the next high probability move is. So as you learn to read the charts using the logic alerts, with the CTAs, you get to look left yourself to determine if in fact you have learned how to read the chart. And at this point, you should also know how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. Price is above the 30-minute BBC, it's trying to reach the zone above. Price is below the 30-minute BBC, it's trying to reach the weekly zone below. We've published the zones every week for our members since December 14th of 2009. This December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Beyond that, just don't make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at the daily chart. Now, is there any question in your mind which way the wind is blowing? Yesterday or today? Quite obvious. Now, I posted this in the passport holders discussion group and the trial discussion group this morning. To expect resistance at the 24% fib extension, which just so happened to be perfectly aligned with the previous bearish cross. So we've ran up, we've tapped that area. Now I suspect that when the Fed announcement comes, we may punch through that area, and when Jerome Powell holds his press conference at 2:30 Eastern, we'll see a lot of volatility. Big question will be, at the end of the day, where will this market close? Above the daily BBC or below? Now, red line gets below the green line, that's a bearish cross. And the blue line gets above the green line, that's a bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And when you have a bearish cross, the first time price revisits the area of the bearish cross, it's almost always good resistance. And so far, it has been pretty much to the tick. Now, I know you don't trade the daily chart, but you should learn to review the daily chart of whatever market you trade, whether it's futures or stocks or crypto or Forex or ETFs, because the institutional traders, the ones, huge accounts, the ones who trade in incredible size, they're the ones that actually move price. We serve as liquidity for them. But they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. So if you'll learn to spend just 2 minutes looking at the daily chart of whatever you're about to trade, what you're doing is you're literally peeking over the shoulder of the institutional traders. And all you got to do is what they're doing long enough, get your goal for the day. Now, there are days when we have dojis and there's indecision. Other days, it's a little more clear exactly what those institutional traders are doing. And every institutional trader on their daily chart has this exact same set of fibs drawn. Now, what many of them don't know is about the bearish cross here, because they don't have our indicator set. Okay? Which makes it really interesting how this is so effective, not only on a daily chart, but on a 30-minute chart, a 5-minute chart, etc. So, this is a 30-minute chart, and again, this is where all alerts are created, both the logic and the CTAs. The vertical line here separates today, Wednesday, from Tuesday, from Monday. When price rallies up to a weekly zone, we expect resistance until proven otherwise. And when price drops to a weekly zone, we expect support until proven otherwise. Price always reverts to the mean. In our case, the mean is green, and it's called the BBC, bull bear cross. When price crosses below the green line, we're bearish and anticipate lower prices. When price crosses above the green line, we're bullish and anticipate higher prices. Now, you see the pullback holds when we pull from above, and the pullback holds when we pull from below, more often than not. But eventually, price will trade through, as it did yesterday, and as it did last night. Okay? This pullback held, and this pullback held, but this one, no. We know that's how price flows, okay? But always expect the pullback to hold, even when it spikes it like this. You see, all of these candles are still touching the BBC. So don't let the spike throw you. This is big time frame stuff. It's not like the fast-paced environment you see in the live training room. That's where you learn the mechanical model, okay? These windows of opportunity. See, this window of opportunity was drawn during a broadcast last Friday, and it fills Sunday night. You can plan your work ahead of time. This was the opening candle last night, 6 p.m. Eastern. 10 minutes into the life of this candle is when the CTA targets were published. There was never any reason to consider this short target because we ran up to the BBC and closed above it. Whenever you have the support of blue and climbing, those are the times when you'll typically see price trade through more often than not. So we closed above it, and then we had a retracement and the pullback held. That's how price moves. Leg, retracement, leg, retracement, leg. Now, when price hits a weekly trading zone, 70% of the time you're going to get this, consolidation. 20% of the time you'll get rejection. 10% of the time you'll get the slice. That's when price slices through the zone on the 30-minute chart like it's not even there. When that happens, typically when the slice runs out of steam, price will retrace back to the zone it sliced through and continue in the direction of the slice. So we hit the zone, consolidated, hit our long target, made it up to the next zone. We had some consolidation right before the zone. And that's because if you follow the horizontal line on my cursor, okay, the market took a little peek above yesterday's high, which was lower than Monday's high, okay? But they did it. They pushed through. Then we had a retracement right back to the zone. And then we continued on to the next zone. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. All of our members, all of our trial members had these zones Monday morning. Right now, the step line is crossing blue and climbing. So this is probably the high of the day for now. Now, I gave you a real good reason on the daily chart. But see, now, and this is a great point. On the 30-minute chart, we can see the step line crossing from the left side to the right side of blue and climbing. That tells us to expect a retracement back to the BBC. But because we looked at the daily chart, we knew way ahead of time where to expect resistance. The larger the time frame, the more important the information it conveys. Now, the pullback holds more often than not. But once the FOMC statement comes out, all bets are off because there'll be just crazy volatility. It's like a circus. Best position is no position. I think I put it in the discussion group this morning. What's the best trade for the Fed? In the infamous words of Joe Biden, don't. I guess that's not the infamous words, it's the word. Don't. Attempting to trade that volatility is financial suicide. Resist the urge. Exercise discipline and self-control. Wait for the market to settle down and resume its normal rhythm. Leg, retrace, right? Then you can get back in the water. All right, that's the ES. Here's the Dow. We opened just above this weekly zone last night. And like the ES, we got above the BBC. We were supported by blue and climbing. There's a bullish cross. Now, this low is just above the bullish cross. Price ran right up to the zone. When the market finds resistance, it's going to go look for support. Remember, the pullback holds more often than not. However, in this case, the bounce off the BBC ran smack dab into red and falling. which is resistance. So that pushed price lower to just above the bullish cross. This is where we would be expecting support to kick in. So we get back above the BBC, we get above red and falling. We now have blue and climbing. There's a nice little window up here. 41,270 up to 41,370. Be 100 points. $5 a point. On the Russell. This was the opening candle. We came down to the BBC and blue and climbing. That's support times 2. That support gave us a leg and a retracement. See the pullback held. And then we got a big leg, consolidated for 2 candles at the zone. Then we pushed through to the target and through the target. Now you might ask, why did price stop there? Look at the horizontal line on my cursor. Bearish cross. When you have a bearish cross, red line gets below the green line, that leads to an extended move. First time price revisits that area will almost always be good resistance, which pushed us down to the bullish cross, which we expect to be good support. Now, we've overcome, we've overcome that bearish cross. So does that leave opportunity on the upside? It's tight. 89 to 91. It's a trade. I wouldn't take it myself. 88 to 89. I mean 87. Nope. 87 to 89 is doable. Okay. All right. NQ. This was the opening candle last night. Got blue and climbing down here. No surprise, we get above the BBC. And we make a run right up to the target. And there's that bearish cross. And here's consolidation right at the area of the cross and the zone. And then we continued higher all the way to this zone where we've consolidated. The step line has crossed blue and climbing, so anticipate a retracement back to the BBC. Question is, will it hold or not? That remains to be seen. Remember, the pullback holds more often than it doesn't, whether it's pulling up from below or pulling down from above. Crude oil. Turnaround day for crude. Yesterday we found resistance at the zone, support at the zone. Last night we opened here above the BBC with blue and climbing and made a quick run right up to the target. Then we sliced through the zone, and this time we did not retrace back to the zone we sliced through. That's an indication of a very powerful move. Now this high right here, okay, you see that 3 candle sideways right there, based off that high, but we broke through it. Leg and retracement, leg and a retracement, a leg and a retracement, a pull back to the BBC. We spiked it, but it held, and now it's pushed us up to the highs of Monday. See where we're at right now? This is the high of the week. The next zone overhead is 77.85/77.90. There's no reason to ever think about the short target last night because price never got below the BBC. Gold, we are in the December contract now. Here's where we opened last night. We dropped to the BBC, bounced up to the zone resistance, which sent us back to the BBC support, and then huge slice. A retracement that only came back to here. Leg and a retracement, a leg and a retracement. And we've got a high on the week at 24.74. Now we've still got 2 days left. This is the highest zone for the week for gold, 25.15/16. So we don't expect gold to close the week above that. We'll see. Silver. Another big day for silver. Here's the open last night. We dropped to the zone and the BBC, both of which are, we expect support till proven otherwise. Going into the close yesterday, we consolidated at the zone 28.44/45. Trace to the BBC, and then in one candle, all the way to the target. Now you only need 2 pennies, okay? You only need 2 pennies in silver to get your goal for the day. This candle opened at 28.46 and ran up to 70. That's about 20 points, about $1,000 per contract traded. Take. Then we get a leg and a retracement, the pullback holds. Then we get another leg and a retracement and the pullback holds. But now, the step line has crossed. So, this may be the high before the Fed announcement. As you can see, once that step line crosses, blue and climbing, you anticipate a retracement back to the BBC. And here's where the euro opened, above the BBC, ran up to the target, pulled back to the BBC. This was very messy here.
All right, here I am.
Okay. Then we ran up to the zone, and then we came back through the BBC and hit the target. And Michael, as you can see right here on the daily chart, I published this morning in the discussion group. Bearish cross.
Yep, we're right
24% fib extension. I posted that for everyone to be aware that there was potential resistance, and again, it laid out. Now, I've already said with the FOMC this afternoon, things are going to get wacky and crazy, and I wouldn't even be surprised, given the political climate, if we got a surprise rate cut. Everybody's betting, and all these regional banks are betting on a rate cut in September, and I've heard no one else even mention the thought of a surprise cut today. But
boy, that would be a big surprise.
Given the current political climate and some of the numbers that we saw this morning on the econ reports, not going to count it out. So
what
Michael,
can you do?
Michael's going to give us a recap of what happened in the live training room this morning.
I will.
Then we'll go live on TradingView for 30 minutes, do some live trading. I'll come back, and since I finished the entire recap, we'll wrap things up with our good word for the day. Everything looks good.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the 31st and final day of July 2024. It's the final day of the best month of the year for us so far. I'll get into that in just a minute. But if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. And when you click on that, there's no credit card required for the trial. Click on that, it's going to bring you to this registration page. All we ask for is your name, email, phone number. There are 5 multiple choice questions. Down here, if you have an interest trader, give us your machine ID. If you have TradingView, give us your login ID. Hit the register button. Okay, when you do that, we'll know that you did all that, and we'll be able to enable the indicators so you can have them indicating on your desktop in front of you as you begin the trial. Right, we've sent all the information you need to get into the room in the morning at that point. Now, the spreadsheet, here it is over here. All right, so we did what we wanted to do today. We made enough today to make it the best month of the year. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 31st day of July 2024. You made 91 ticks on the Russell, 38 ticks on the YM, and 9 ticks on the ES. That put us at 750 on the morning session. Today it took 5 minutes and 1 trade to get to $1,900, and we took a total of 13 trades. So when I get the goal for the day starting tomorrow, that number will be 2,000. All these 1900s will be 2,000 starting tomorrow. We'll be at the 20th contract in our 2420 blueprint. Now, that puts us on the month, wrapping up July at $10,867 per contract, our best month of the year by $100 or so. Over 21 business days, averaging $517 per contract per 2-hour business day. Now, I don't know if that's the highest. 517, is that the best? 307, 488. Yep, I guess it is. 488, 307, 347, 517. That is the best one. Actually, I missed a month in there, but I think is this year? Yeah, that's this year. 372, 456. That was on 430, 456. Okay. It is our best month of the year. And that, well, tomorrow we'll be trading 20 contracts. Within August, we'll be trading 20 contracts starting tomorrow. If you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year, you would now be on the 7th contract, but starting tomorrow, you'd be up to 8. You got to make $14,000 quitting when you get the goal for the day this month. And if you did that and did it like I did, you were up $19,000 this month. All right. That will give you an average. It was with 46.5 hours so far this year. So you're averaging $1,656 an hour on the year. Now, if you started when I did in January of last year, and added 1 contract a month, starting tomorrow, you'd be at 20 contracts. It's the 20th month. You would be averaging $6,860 an hour. The same 46.31 hours this year. Okay. All right. Now, let's get into the actual trading. We did not trade the MQ again today. We'll get into that. Well, I'm not really going to cover the MQ at all. We'll just show you the YM. We had plenty of trades between YM and the Russell. We had some really nice trades on both of those markets. So we'll just cover those markets today. Right, the ES had some really nice movement today. Sadly, I was not part of that movement, but it really did have some nice movement. Let's see here on this is the YM. Okay, so our first trade in here on the YM is where we got the goal for the day. Right here, we picked up 20 ticks on that one right there. Right, bang, right there. I had the target set at 20, and it gave it to me. Gave me all 20. The next trade that we took on the YM apparently was not for a little while. It was right here. Now on this one, we had kind of a screwy thing happen here. I picked up 26 ticks on the move down, but then I messed up my order with the DOM and I ended up losing 10 ticks. So I'm sorry, I picked up 10 ticks on the way down. I'm sorry, I picked up 6 ticks on the way down to get me to 26. That's where I got the number from. Picked up 6 ticks on the way down to get me to 26. And then I messed up the order and I lost 10 ticks. So I ended up losing 10 there. It got me down to 16. Now the next trade after that was right here. I picked up 30 ticks to get me to 46, and I just stopped out normally on that one to get me back down to 36. And then I picked up 2 ticks here to get me to 38. And then I believe I got into the lesson plan, and I did not trade again. I don't know why I am. I don't think. We had some nice missed opportunities in there, but I was not trading during that portion of it. And here during the break, we had relatively little to trade in there. The Russell, let's take a look at the Russell. I want to see while it's in here right now. Let me go up here and check out who is in here. Okay. So in the Russell today, this is the Russell. Let me scroll back to the beginning of time here on the Russell. Okay, going all the way back to the beginning of time. Oh, I just had a twitch. Okay, there we go. All the way back to the beginning of time. So on the Russell, very first trade today on the Russell, we actually had a 11 tick stop out on that trade. So I was minus 11 after the first trade. And then we had another one of those screw ups with my DOM. In this case, it kind of messed up because I was trying the strategy and the strategy messed up. So I think it was right here that happened. It might not have been here. I might have just screwed this one up too. But anyway, I picked up from 11, we picked up 30 to get us to plus 19. And then I messed something up here and I ended up losing 12 ticks and put me down to 7. Right. Then right here, I picked up 10 ticks to get me to 17. And then here, I picked up 30 ticks to get me to 47. This was another one of the ones. This one was a strategy screw up on the DOM. I stopped using the strategy after this one. Because I picked up 30 ticks to get me to 47, and the strategy messed up, and I ended up losing the 6 ticks to get me down to 41. That's what the orange arrows are. Just screw ups that I ended up losing money on that were not full stop outs. Then right here, I picked up 3 ticks to get me to 44. Then I picked up 30 ticks to get me to 74. And then picked up another 30 ticks to get me 104. And then we stopped out here and I lost 13 ticks on that. Oh, wait, I'm sorry. We went from 104 to, missed something on that. I think I missed something on that one. I didn't fill that in. The next one that we have, we went from 104 down to 91. So I missed somewhere in here. There's a stop out. I think that last one was a stop out. It shouldn't be a blue arrow. It should be a red arrow. I think that's what it was. This one right here should be a red arrow. And I lost 13 ticks on that one, getting down to 91. And that is where we stopped trading on these markets, I believe. During the break, let's get all the way over here. All the way over here. During the break, there was some black arrows, no blue arrows at all during the break on the Russell. Okay, and I suspect the market's going to flatten out here a bit as we get into the FOMC or get closer to the FOMC. Now, the next half an hour, I don't know if we're going to have any trades at all. But I am going to tease you with something in a minute. All right, so the ES, we had just one trade. I'm not even sure if this is where it was, but we had just one trade on the ES and we got plus 9. I'd have to go back and figure out exactly where it was, but at some point in here, we had plus 9 ticks, and that was all that we did with the ES. I was using the ES today for my lesson plan, and this was one of the leg lengths that I was using at the time, and I don't know if it reused that leg length anywhere else. You see this ended up being a thing right here, and usually once it establishes a nice leg length, you'll be able to use that leg length again and again throughout the day. But you can see right here, we're just going sideways. Now the NQ, I'm sure was kind of crazy today. I'm not even going to bother looking at the NQ. It's 104 right now. We had plenty of opportunity between the markets that we did trade. So for right now, I am going to go to here for a second. Tell everybody that's watching on YouTube right now, because right now is when a lot of people tune in on YouTube. And say if you've not taken a free trial, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Click on that, and it's going to bring you to this registration page. Fill out this form and take the trial. All right, it's as simple as that. When you do that, we'll send you all the information you need to get the indicators indicating on your charts. Now, we'll go look at other things one at a time here. This is what the NQ looked like today, okay, on the 15 range. The liquidity on the NQ is really, really thin again today, and it's going to get even worse as we approach FOMC, I imagine. I haven't looked at it in a little while, but I really didn't want to trade it today. I'm actually leaning further and further away from trading it at all. And you know, it's been one of our biggest earners. Yeah, I gotta shut that off because that didn't work at all. It's been one of our biggest earners this year and last year. But when the market's getting really, really thin like that, when you're trading this many contracts, it's just not a good thing. You get so much slippage that it makes it hard to want to take the trade, knowing that you can lose so much every time you enter a trade. But just looking at the blue arrows here, you can see there were a number of blue arrows here that were successful. You know, if you're trading just one contract or 5 or maybe 10 contracts, you know, there were a number of blue arrows here that were very good. And if you just looked at the blue arrows, that would be a good thing. One of the things that was part of the lesson plan that I've been doing, you know, I do the lesson plans all the time, but every time I do the lesson plan, I don't want it to be really dry for everybody that's seen the lesson plan over and over and over again. So I try to include things or maybe say things in a way that people haven't heard me say it in the past. And you know, sometimes I try to, and sometimes it just happens. But one of the things that I've been saying lately is if you were just doing the green arrows, just taking the green arrows, okay, not the black ones, just the green ones. So if you make all the black ones go away too, like that, and like that, just doing the green arrows. Leg lengths was part of the lesson plan today. And the green arrows that have a 50% pullback in the leg lengths are the ones that I like the most. All right. So what does that mean, you might ask? Well, let's go back to the beginning here, and we'll do it going forward. Okay, instead of swelling backwards like this, we'll do it going forward. And let's just start here. This is on the NQ. Now, I'm not really focused so much here on, I'm not focusing so much on, you know, the ticks or anything like that. It's gonna, no matter what the ticks are, you know, it's gonna be the same way. So what I'm looking at right here is when you have this move down, this is the leg length, right? This is from today's lesson plan. Most of the people that are in here right now that are watching are active partners, or at least partners to some degree. So I'm not really giving away a whole bunch of information here, but this is the leg down. So on the green arrow pullback, I want it to hit this level right here. Okay, I want to see it hit, well, I'll use this. I want to see it hit that level right there. I'm going to make it a different color. Make it this purple. I want to see it hit that level for the green arrow on the pullback, because this is the leg down. Okay. So right here, there's your green arrow. It hit that level right here. Remember, this was the level to see. These are the kind of green arrows that I like. Those are the ones that I like, that hit that level and don't go through that level. They happen at that level. Bam. Those are the green arrows that I like. Okay, if you're going to do the green arrows, if you're going to do just the green arrows, like right here, start the whole thing over again. This is your new leg right here. Okay, start the whole thing over again. If you're going to do just the green arrows, now you're looking at this level right here. Okay. You didn't get a green arrow on that one. You didn't get any arrow on that one. Okay. So right there, there's a black arrow. You see the outline? That would be a black arrow right there, but it's not a green arrow. All right. So you're still looking at that same level because the leg length hasn't extended at all. There's your green arrow right at that level. Right at that level. Okay. That one's got so well. But then you go in the opposite direction. Now this is still in chop right here. You want it to really get out of the chop. But it's showing you the green arrow right there. But wait until we find somewhere where we're not in chop. So here we have another leg length right now. We have another leg length that we can work with. Let's move this out of the way. And now we have another leg length that we can work with. You could use this, but I would use the whole thing right here. Okay, I would use the whole thing like this. So now our midpoint is going to be right there. That's where I want the green arrow from. Okay, oops, that's way over here. That's where I want the green arrow from. It's still pretty much the same place. Okay, now it gets extended a little bit here. Okay, oops. Okay, so it got extended a little bit more. So now this goes down to right here. That's where I want the green arrow from. Now you see the way this is coming together? It's going to pull back too deep, give me a green arrow that I'm really interested in right there. You see how that all works? If you're just going to do the green arrows, then that's how I look at them. All right. So you didn't end up with a green arrow there. You ended up with a black arrow. You would have had a green arrow right here, but it didn't come out of the overbought. All right. So you didn't end up with a green arrow. It didn't pull back deep enough to hit that level. You ended up with a black arrow. Now this is the kind of black arrow right here. I know the black arrow was just the outline right there. You guys, I don't know if you can even see that. Bring it over here, blow it up a little bit for you. Okay, you see the outline of the black arrow right there. This is the kind of black arrow I would want to wait for a pullback and get it on the pullback of the bar. It's happened so close to the ribbon, I would want to get it on the pullback of the bar. And what that does is it makes your entry point close enough to the ribbon so that if it does pull back and hit the ribbon and then drop off the ribbon, you can get a blue arrow that triggers right after it, if that's what does happen here. I don't know if that's what does happen, but that's what I would wait for in this kind of black arrow right here. All right, you didn't get the green arrow because it didn't come out of the overbought in that spot. But blue arrows that don't make it up to the 50%, those are the kind that I like, the blue arrows that don't retrace all the way up to the 50%. And there it is right there. I think well, you're not going to have a blue arrow there. That's just a ribbon trade right there. You see how it hit the ribbon right there? And it gave a down close. You're not going to have a blue arrow because it didn't come out of the overbought. But it hit the ribbon. Now right there, it hit the ribbon again, and it hit the black line in the ribbon. So it's gone right through the ribbon, and you're not going to have any trading here now. And now it's gone the other way. So now you're making a leg on the other side. All right, getting ready for the green arrow on the other side on the pullback. Looking for the pullback here. Okay, so this is kind of a mess the way it came together because you don't really have a leg length right here that you can work with. No. I guess you could do it this way. Let's do it this way. Oops, I don't mean to do that. Remove that and slide it all over here. But let's work with this. Okay. So go back in here and get your fib retracement, and here's your leg length. Okay. So I guess this is okay. You can work with this. We'll start it. I'm starting it right here. I mean, you could start it down here if you wanted to, or even all the way down here. But that's not going to be any good. Neither one of those is going to be any good because you want it to pull back to the ribbon. So this is what we want it to pull back to here. This is the green arrow spot we're looking for now. Right there. And see his price moves over. Yeah, let me do it over here. His price moves over. Now we're into the ribbon, but we went right through it. So there's not going to be a trade there. Okay, so now it's a mess, and it's probably in a no trade zone. Pops out a little bit. That little bit of a pop out extended this range, the retracement, just a little bit. Okay, that went right through it again. So you're in a bunch of chop right here. You're not going to end up with anything. Anyway, that's what I look for. I was just trying to give you an illustration of what I look for with the green arrows. And if we had just green arrows, if we just go back and look at just the green arrows in here. See, this was the leg down, this is the retracement. In here, this is the leg up and this is the retracement. Then this is the leg up and this is the retracement. So it's, these little ones that come off of little legs up, they're still there, they're still valid trades, but like this is the leg down, this is the retracement, 50%. This is the leg down, this is the retracement, 50%. This is the leg down, here's the retracement, 50%. This one here, the leg down, if you started it way up here, you go all the way down here, and that's about 50%. If we do the math on that, put the tool on it, it's exactly 50% right there. That's what I look for the green arrows. All right, if it goes deeper than that and you get a green arrow, then I'm not terribly interested in it. It usually lost too much momentum. If it goes deeper than that, you get the green arrow, right? I don't know why I felt the need to point that out to you, but I did. So there it is. That was the NQ today. I didn't trade the NQ at all. Not to say that you couldn't trade the NQ, but I wouldn't do it on the 15 range. You know, you want to do the NQ when it's really choppy and you're getting a lot of slippage. You want to do it on a larger time frame, probably with fewer contracts. You know, I've been showing it on the 31 range because on the 31 range, your buy stop limit and sell stop limit would be 8 points from the top or bottom of the bar. Maybe 8 points instead of the normal 4 points that we have. Now, if I put everything back on here, black arrows and all, see, I think there were some pretty good opportunities in here using this time frame. And again, if this time frame is too rich for you and the stops are too big, all you have to do is trade a reduced amount. Well, actually, trade micros instead of trading a larger contract. You can trade micros to reduce the amount of cost per tick in gain and risk, but still get the same signals. Right? Still work off the same exact signals. Make sense to you all? All right, it's 1:16, 14 minutes left. 14 minutes. So I'll give you a peek at something. Maybe that's not the peak. Maybe this is the peak. Let me shut that off. Not that all the way off, but stretch it out just a tiny bit. I can go in here and shut that off and that off. There. I was still calculating the removal of all that. Okay. Down here, let's shut off one of these things. Okay, so here it is. Now, same information, the same kind of thing. Pullbacks is what you're registering on, is what you're looking for. Look for all the same information. Now, in the future, with Trading IQ, we're going to have something like this with Trading IQ that's going to help you get into trade after trade after trade without having all the other stuff on the chart. Some of it's going to be on there. Some of it is going to be on there, but not all of it. Okay. And I've created a thing. This is a sniper. Now, this is pretty conservative. Sniper is loading up right now. It's pretty conservative when it loads up. You'll see it triggers in really nice places for trades, typically. And it does longs and shorts. You can't just make it do one or the other. It does longs and shorts. I could make it do one or the other, but it does longs and shorts. And this also has a bias associated with it, but the bias is always on. So you got to set the bias to something that you're comfortable with. That is right here, the snipe bias level. I'll be going into all this afternoon, but this is the conservative way. Here you go. This is the conservative way. That's what you were looking at. This is the aggressive way. It's still loading it up. So much to do. Ta-da. Look at all those trades. This is on the 7 range. I wouldn't do it on the 7 range, but trade. How many of those are winning trades? And see, out of like the 20 of them that you see in front of you right here in this 1 hour span, that one stopped out. And that one stopped out. Pretty good stuff. The sniper. Coming your way. Now, the other thing that I want to look at in here, I want to look in here at the meta. This is Jumia. I don't even know what that is, but it was put in our option channel the other day. I'll show you what it was in the option channel. For you guys who are passport holders, you may not even know you have the option channel, but if you are a passport holder, you have access to the option channel. And this was put in there the other day. This is some analysis that Stefan had done. And now he had drawn all this in here, and these are areas that it should get to and areas that it should retrace to, and we should find support and resistance and all the stuff that he normally puts in there. And then I did this. And this is based on the same thing. If I just scroll back and forth, you can see this was his, and then I just applied the TV trades to the same exact chart. And here the TV trades gave a long trade back here at the beginning of July. And even right now, it's giving targets out here. These are the target numbers, 1495 and 1969 are the target numbers that it's given out for the next move up. And using the information that we just had on that tiny time frame here on a daily chart, it's suggesting right here that it's about to begin that leg up. Now, using the range sniper, which is something that TIQ doesn't have yet, but TV trades, the pull out of here is the conservative. The push into here is the aggressive, depending on some other criteria, but basically that sums it up. Pulling out of here is conservative, and pushing into there is aggressive. So it hasn't hit the aggressive spot yet. The aggressive spot happens after it does the push into there, given the other criteria. So the Jumia, I don't even know what that is. I don't even know what that symbol is. What is it? That is Jumia. I guess I was saying it right. Jumia Technologies. I don't know what they do or anything like that. I don't even know why the thing was out there in the option channel. But apparently it's something that Stephen was watching. I guess, I get it. It was the August weekly 17 call activity was really high. I think that's what it was. The call activity was really high. Oh, and look, he had outlined something in here. Oh, that's a different thing. Okay, sorry. Those of you guys that are specialty retailers out there, Chris. Okay. Those of you guys that are passport guys, that option channel is available to you. I don't enter stuff in there all that often, but there's stuff like right now. One of the things that Dwayne and I mentioned just briefly as I was coming on, we have FOMC coming up this afternoon, and Dwayne's talking about a potential, and this is, there's a chance that this is absolutely not going to happen, a good chance that this is absolutely not going to happen, right? Dwayne was just saying, given the political climate, he wouldn't be shocked if they did a rate cut right now, because it would help, politically, it would help those that need help. But how can you take advantage of that? I mean, you can't play options right now because everything, the options are way overpriced right now. If you want to buy call options, that'd be foolish to do that right now. What can you do? You know what you can do? Micros. If you're going to risk, like, let's say you're going to go out and spend, let's just say $500 on a call option. To risk the same $500 with a micro, you could put a micro on. Like you put an ES micro, they're $1.25 a tick. You could put an ES micro on with 125 point stop. Would be about the same as your $500 risk. You put one ES micro on with 125 point stop with an open target, or you could even put like a 500 tick target on that. And I'd be surprised if a rate cut does happen, you're going to get that $500. And at the end of the day, it's a micro, so you still have some value in it when you sell it. You still have the micro at the end of the day. You don't have any time decay on that. All right. That's exactly it, Chris. That's what I was saying. I mean, you can go out there right now and buy a micro, and whether they're increased or decreased in price, I don't know what they are on the day, but I'm sure they're up probably on the day. Let's just go look. Let's look at the MES. I'm sure they're up on the day. Let's look at it on a 30-minute chart. Actually, they're at a point right now in the day, right in the middle, it looks like, right? Where'd they open? They opened this morning right here at 9:30. They opened the day right here at 9:30, right here at 5:43. So they're only up 10, 15 points right now on the day. And they're coming off the high of the day. So doing right here, everything that I just said about the retracement stuff and the leg lengths, it's happening right now. You're getting your 50% retracement right now. So you're pulling back down to a perfect buying opportunity.
But up considerably on the session, which began at 6 p.m. last night.
Well, I guess, at 6 p.m. last night. I was talking about from 9:30 this morning.
Right.
Yeah, from 6 p.m. last night, it's way up right here. Right here is way up since then. But just talking about right now, it's pulling back down here. And FOMC comes out in a half an hour. So this is a perfect spot for it to bounce off of right here. And if you had a micro right there, you could put your stop like down here below this swing low right here, below all this junk. And I don't know what that would be exactly. It looks like, I don't know, 30 points, $120, something like that, $150. And you could have a target of 500 on that. And if they do a rate cut, you're going to get that 500 tick target, I would bet, without a problem. You might want to cancel all and just let the thing run. Because there's no time decay on that. So you could hit cancel all while you're in profit, and then just put a stop at plus 100 ticks, and just let it keep running for days if you want to. There's no time decay on that.
By the Fed since the early Bernanke days. Janet Yellen never did any surprises. Jerome certainly has done no surprises.
That would be a huge thing. I mean, and you could even do it with the YM instead of doing it with the ES. The YM's 50 cents a tick. So you could do basically the same thing and risk half the money and still have the same type of return.
Yeah, don't expect it to happen, guys. But
no, don't expect
if it does happen, you won't be as surprised as the rest of the world.
Yeah, the chance of it happening is really, really, really slim. But that is one way you can capitalize on it. What I just showed you right there is one way you can capitalize on it and be ready for it or take advantage of it. And as we get closer and closer to the actual Fed coming out, the market's it's gonna start to react as we get closer and closer. Typically with this big movement up, what's probably gonna happen is the first move it's gonna do is gonna retrace all of this. It's built in all this, and it's gonna retrace all of that, and then it's gonna go back. That's probably the first thing that it's gonna do. It's gonna retrace it, and then when they start talking about it at 2:30, it's gonna go back up here where it was. And I would bet that that's probably what it's gonna do.
Keep in mind, guys, the volatility is broken into two parts. 2 o'clock, when the interest rate statement is given, and then at 2:30, Jerome Powell will deliver the prepared statement, and that will create some volatility. But then as he begins to take questions from the audience, that's where you see the most volatility, typically, of late.
And that gap that we had last week is right here, still unfilled. Gap there and the gap right here on the NQ. I would bet those get filled today.
Whatever happens over the next few hours, don't get too caught up in it. How we close today and open tonight, that's really what you want to key in on.
Yep. If we don't get that rate cut, I'm betting that this is where we end up.
Quite often, after the dust settles, we're right back where we were
the day before.
before the announcement.
Yep. That's what this is right here. And right before the announcement will be right here. So the announcement may come, it may drop and then go up, or it may go up and then drop. We got to fill this gap at some point. That's going to happen. The one on the NQ is also going to happen. You could have bought call options down here if you wanted to, knowing that that gap is going to get filled, because it is. But this is where I think it might end up. I don't know. It depends. It depends what happens. I don't know. I don't know. But I've given you some ideas, and I don't think we took a single trade in here, had we?
Wow.
There's one setting up right now, but let me try to put that trade on. Right? One setting up. There's one over here on the YM setting up. There's one over here on the NQ also setting up. I haven't taken an NQ trade all day. Yep. But I just took it, and here I'm throwing my stop at break even. I'll bring it over and show it to you. Here it is. It's my first NQ trade of today. And it's almost got 36 in profit, but I'm going to lock in something on this. There it is, and I just got all 36 on it. All right, my first NQ trade of the day. Ding, ding. So I did take a trade. I didn't get the YM one, but I did get that one. And look, we had a Russell, a YM, and an NQ all happen at the same time, even the ES. Sweet. All right. Well, let me finish up by saying, if you have not taken a free trial with us, go out here to mytradingiq.com. Click on the purple button right here. There was no credit card required for the trial. Right? All the stuff that I just talked about, everything that I just said, is all in the trial. It's all part of the trial. When you click on that, you'll be brought to this registration page. Here, first name, last name, email, phone number, 5 multiple choice. If you have Ninja, give us a machine ID. If you have TradingView, give us a login ID. Okay. And that is it, guys. I'm going to wrap it up right here. And right now, I'll pass it back out to fabulous Arizona in Studio A, overlooking South Mountain, America's largest city park. Wait, if you are ready.
I am.
Excellent.
All right, recap of the morning session.
Today, it took 5 minutes and 1 trade to get to $1,900.
Good job.
Thank you.
All right, guys. Good word for the day. Christ's love for you. Ephesians 3:19. To know Christ's love that surpasses knowledge. Princess Alice was Queen Victoria's daughter when her son contracted an incurable disease called black diphtheria. The doctors quarantined the boy and warned his mother to stay away from him lest she get infected. But she couldn't. One day she overheard her son whisper to his nurse, "Why doesn't my mother kiss me anymore?" His words melted her heart, and she ran to him, smothering him with kisses. Within just a few days, she died and was buried. What would compel a mother to risk her life for her child? Love. Now stand at the cross and ask, what would lead Christ to do something even greater for us? The answer is the same. Love. Writing to the believers in Ephesus, Paul says, I want you to know Christ's love surpasses all understanding. You can trace the greatest action of Christ to his greatest attribute, love. Perhaps the people who should have loved you didn't. And those who could have loved you wouldn't. Maybe you were left at the hospital, or left standing at the altar, or left with an empty bed and a broken heart. Regardless of the cause, you were left with the question, does anybody love me? And today, Christ answers, I do. Truth is, his love for you is too wonderful to be measured. Hymn writer Charles Gabriel wrote, I stand amazed in the presence of Jesus the Nazarene and wonder how he could love me, a sinner condemned unclean. How marvelous, how wonderful, and my song shall ever be. How marvelous, how wonderful is my Savior's love for me. God could not love you more than he does right now. And that, my friend, will never change. That's our good word for today. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.